We have a great show today as we round up what 6 institutional Tesla investors are forecasting for Tesla stock right after the Q3 earnings and just before the big Robotaxi event. We're going to review a video from Gene Munster from Deepwater, and we've got notes from Barclays, George Gianarikas from Canaccord Genuity, Adam Jonas from Morgan Stanley, and also the bears like Ryan Brinkman from JPMorgan and Bernstein. Let's see what they're all saying after we saw those recent updates from Tesla. We've got Larry Goldberg joining us to help us review all this. One of his favorite things is these institutional analysts, right, Larry?
Yeah. Great to be here, Herbert, particularly to join these institutional analysts and their fine analysis.
You're a retail analyst, and oftentimes the retail analysts are much better at this. One example is when we just had the Q3 earnings numbers, many analysts and quite the media said that it was a Tesla did not hit the expectations. But actually, who set those expectations and who chose which expectations to share the 463,000 number of vehicles delivered number? And actually, Simon Hale, he's one of our favorites who's been joining us quite often in this channel. He is a portfolio manager, and he is much like an institutional analyst because he has the same terminals. He has the same fact set and Bloomberg's terminals. And what he said was Tesla analysts were actually calling for 460,000 deliveries, not the 463. I'm not sure where the mainstream media got the 463 number, because when he looked at his, the screenshots, 58 analysts on the street, the average was actually 460. So he shared his screenshot. You can see here the fact set, 58 analysts, says 460. That's what they were shooting for. And yet you see this. For some reason, these guys reported that the fact set is estimates compiled is 463. So Simon's going, where are they getting these numbers from?
Yeah, I don't know where that number came into currency from, because, I had also checked ChatGPT, and it actually just reported that number straight out of that press release. So I don't know how they calculate the number or what time of day and so on and so forth, because the number does change, during the day. So when we're talking about a couple of thousand, if it's a miss, it's certainly not much of a miss.
Yeah, it's not a big deal. Even if it's 5,000, even if it's 10,000, it's not a big deal either way.
10,000 is beginning to be a deal.
No, I was talking to Matt Smith about it, and if you put in the forecast and everything, that doesn't really make any much of a difference. But okay, so let's listen to Gene Munster from Deepwater. He has comments about what he expects for 2025, which is actually pretty low. But then he also has comments about what to expect with a Tesla event, Robotaxi event. So we're going to watch a video for him. So we've got 2 parts here. The first one is the actual video himself that he was interviewed by CNBC. And he's saying, don't expect many details at next week's Tesla event. He thinks that there's going to be 3 new models, a cheaper car, a robovan, and a robotaxi. So we'll ask you your opinion on that. Not only him, but quite a number of analysts they're like setting it up. They're expecting a $25,000 car. And no one said that they're going to produce that or show that on the Robotaxi event. But if that doesn't happen, then these guys will be again forecast missed, which is like where that come from. He also has a much deeper review, and we're going to go through that as well. So let's watch his video first.
Let's get more on Tesla's numbers with Deepwater Asset Management's Gene Munster. Gene, good to have you with us. You think another model will be announced?
I do, Melissa. I actually think there'll be 3 models. That cheaper model that we're just talking about, I think that they'll have a robo van, we'll call that, something that's way off, and then of course, the Robotaxi. So I'm going to this thinking we'll have 3 models. I do agree with Phil that next week is going to probably be light on details. If you just look at the setup of the event, the number of people that will be there, this is not analysts and investors with their laptops. This is essentially a launch party. And so you can imagine Elon getting up there, talking in kind of very high level and not giving much substance around details. The one detail that I'm going to be hyper focused on is that cheaper $25,000 car when they expect to ramp production. And I just want to kind of put one thread through why this is important for next year, is that the street's looking for growth to go from essentially 7% in the most recent quarter to 12% next year. to get to that 12%, you essentially need to have that cheaper model starting to ramp in the middle of the year. If you look at historically, the gap between when they announce a vehicle to when it actually becomes available would suggest it's going to be late in 25 or early 26. And so we could be shaping up for a little bit of an air pocket, still believe we're going to get back to growth, but I think investors should have their their eyes clearly on the timing of this new vehicle because it's going to impact delivery growth next year.
Okay, I'm going to pause it here. We'll come back to him because we're going to go a deeper dive of his estimate for how are you going to get to the growth in 2025 and 26. But let's stop with what did you get from his expectation for the Robotaxi event? 3 new vehicles, a $25,000 vehicle. Where's this coming from?
Hopes and dreams. I mean, I've seen so many prognostications about what's coming on 1010 that I've just given up trying to think about it. I'm going to see what happens on 1010 and then I'm going to comment. Gene hasn't proved to be that good a prognosticator on the Tesla front. He's a great supporter of Tesla, but his guesses are as good as anybody's. And so we'll see. I agree with him that we need a $25,000 vehicle. I agree with him that we need to expand our TAM significantly. I think these are very important considerations. I just don't know where Elon's head is on this issue. And, Elon is going to take a different direction from what anybody thinks. And so time will tell.
Okay, let's listen into the rest of the interview here.
So the 12% growth number you're talking about is 12% in deliveries or 12% in revenue? Because I would imagine the more models you're launching and trying to ramp, the thinner the margins will be. And that could be an issue.
Yeah, the 12% was in terms of deliveries, and I think the street's starting to factor in some of that cheaper model.
All right. So it's baked into revenues, it's baked into profits, it's baked into margins.
And yeah, and you could see if that timing gets slipped. I'm a big believer in Tesla. I think that deliveries growth will ramp into the 20%, but I just think people should have a level head in terms of what 25 looks like.
Gene, it's Tim. So again, around gross margins, 14.6 is a number I see being talked about. What do they have to do to get the street excited that you're not seeing this erosion? And is there any expectation that that could be a surprise?
We're still in the transition period. I think this is an important quarter, the September quarter, because we finally returned to growth after 6 months of declining deliveries. So that's an important part. And I think that lays the groundwork for us to have some improving margins. But as long as they kind of stay stable, I think it will give investors, of course, Tesla investors are notorious for having a long-term view. And if they can keep that stable right around that 14, 15%, and keep some optimism around these products coming out mid to late next year, I think that's enough. If that margin declines, then, of course, it's going to be a whole different conversation around the stock.
Yeah. What do you think about what you heard there?
Yeah, so this is Gene's strongest suit. His sense of the business and his understanding of the business is pretty deep. And I think he's correct. I think there is a risk of margins slipping a little bit further. And if that happens, I think there could be a significant, reduction in the excitement around the stock from the portfolio manager's perspective. I don't think it's going to change the retail investor's perspective. 1 quarter margin being hurt. I think a lot turns on what we see, not so much from the models, but from the Robotaxi perspective. A lot turns on what we hear from the company as far as its autonomous driving capacity is concerned. I suspect that the event is going to be not just Elon, but maybe, Swami will get up there and talk about where they are and actually give us a roadmap. Because if Tesla AI gives us a roadmap, we now have a very high level of confidence in Tesla's AI's perspective on what's coming and what they can deliver. So I think that is going to be much more important in terms of the retail investors' view of the stock value.
Thank you for that. So let's talk about his estimate for what's going to happen in 2025. in his write-up, Tesla, one thing he did really nicely was he bucked the trend. Instead of everybody, all the analysts saying, hey, Tesla deliveries actually were really negative, he's saying actually they returned to growth. So that's one thing that he said correctly. Deliveries returned to growth for the first time in 9 months, despite the headwinds that have pressured the broader auto industry. Inventory levels remain within historically normal ranges. Now, his biggest concern, though, is the next year, 2025. He's thinking that deliveries will fall short of expectations because they're dependent on the timing of a new model. So here's his the street expectations, and here's his expectations. He's only expecting 1.9 million cars delivered when this year or last year was 1.8 million. This year is likely going to be 1.8 million. He's thinking it's going to be pretty flat. And then 2026, he only thinks 2.3 million at that point, and so forth. And so much lower than what everybody else is saying. What's your thinking about his numbers?
My numbers don't necessarily differ from his or the streets. My numbers simply say that growth is going to be pedestrian until three things happen. One, FSD becomes solved. Two, we have a robotaxi vehicle ready to take the streets. And three, we have a broader range of vehicles. Those are the three, requirements. And of the three requirements, FSD / robotaxi is like 90% of the issue. So if you're invested in Tesla, there are several factors to take into account. And when you take the car into account, by far the most important issue, in fact, the only issue, is FSD / robotaxi. So his guess and my guess are only guesses as to when it comes about. I want to hear from Alaswamy not exactly, but what he sees as, the event where we can say, yeah, we're done. I think it's going to be done in 2025. That's the year I've been looking for. And it doesn't have to actually be delivered. It can actually be at a point where it's proven and the delivery takes place in 26 for that matter, because the 1 year or 2 years don't matter at that point. They crack this nut and the game is over.
All right. So you're as conservative as he is. Now, the argument on the other side is that there are two more affordable vehicles that's going to be launched next year. In fact, could even, he said might even be announced this year. But let's assume it's next year, second half. Now, they are on the same production line. So it's not like a brand new, it's two new vehicles, two new models, but they're in the same production line. So it's not going to be this bigger deal. And he didn't talk about those. He's talking about a $25,000 vehicle. And then the other point that somebody would say on the other side would be that Tesla themselves, in the last earnings call announcement, they said that they're shooting for a production of 2.7 million cars for next year. And that's like a 50% growth. So why would they say that we are making sure that our factories can produce 2.7 if all they're going to do is another 1.9? So
yeah. So Herbert, look, a motor car company can make a 12, 15, 20% gross margin. Oh, what's that going to buy? What's that going to do? The money, the growth, the real money, the prize is robotaxi, is FSD.
Mm-hmm.
Without that, you're getting a car company that's growing rapidly.
No, not true. Not true, Larry, because every single car can become a robotaxi, even if they're drivable.
If you have robotaxi, then that's the magic number.
Yeah.
So yes, you're right. He could be completely wrong on deliveries. We could do a lot better deliveries, but absent autonomy, absent FSD, absent robotaxi, all that is a rapidly growing car company.
Yeah. Okay. Yeah. So we shouldn't belabor the point about what the expectations are. More importantly, is are we producing with autonomy?
Yes.
Progressing with autonomy.
Yes.
Okay. Well, I'm glad you reminded all of us on that because we need to do it ourselves. Let's continue though. We're talking about institutional analysts. So a few of them are talking autonomy. So we just covered Gene. We've got Barclays and Canaccord and Morgan Stanley and JPMorgan and Bernstein. Let's go through them quickly. Here's Barclays. They're just reiterating the Tesla price target after the Q3 delivery results. They're still saying down here, equal weight. So they're not bullish, they're not bearish. They still think it's going to be around the 220 price. And the rest of their note, they're just repeating what has actually happened. They think that deliveries miss appears to have been led by Model S, X, and Cybertruck weakness. We'll look for color during the third quarter call. They just report why the stock fell, and that was it. The stock fell. So that's about all they did. And this is a table that they produce of the quarterly deliveries. So you can kind of, I like this one. It's nice to be able to see that it's a record Q3, but yeah, not in terms of like Q2 here or this Q4 here. So, but
right,
still,
but I think Gene was right. When you look at this graph, this is a return to growth.
Yeah.
Q3 this year, and you have to look at it against the backdrop of all the other OEMs who are all, other than the Chinese OEMs, all of the other OEMs are suffering very badly. So, Tesla's going back to growth, and the other OEMs are really struggling. And part of a significant component of that growth is China for Tesla.
Okay. Now we're going to report on Morgan Stanley, but this, just to keep in mind that this was the day before the actual Q3. I don't know if it makes a difference because Morgan Stanley, they're actually very much future focused. So they reiterated an overweight rating of 310 price target for Tesla. And when you read what they're saying here, they're really looking at Tesla as an AI powerhouse. Development of generative AI and large language models could be the great unlock for Tesla's value, particularly in monitoring its AI capabilities. They're expecting big things for the We Robot event. Tesla's stock performance largely tied to its automotive business, which still accounts for over 80% of the revenues. Easily 90% of their questions they keep getting is regarding the auto business. And that's why they keep telling them that Tesla is much bigger than that, especially when you look at the Muskonomy and how they're all connected together. Cars, robots, AI technologies. So, and then here's their breakdown. They give Tesla's the 310 price target. The Tesla auto business is just $59 of that, based on 5.4.
Exactly.
Yes,
that was exactly my point.
And then mobility though would be $62. The energy is $49, which is almost the same as the auto, which is exactly what we talked about. And then third party business insurance is $40 and $5. So you like this then?
This is the best analysis that I've seen. Well, no, it's not necessarily the best. Pierre Ferragu's got great analysis, but this analysis really gets into the depth of the company. The distinguishing feature of Tesla is not its remarkable vehicles. The distinguishing feature of Tesla is the remarkable technology that has enabled remarkable vehicles. And so using that technology, leveraging the vehicles to become robots is really the whole story, and it is the single driver of value. And the retail market recognizes that whether it happens this month or next month, this year or next year, the value unlock is so great that the value unlock completely diminishes the impact of the 1 year or 2 year weight on the total value. Does that make sense?
Mm-hmm. Exactly. Appreciate that.
But Morgan Stanley recognized that. That's the value of this document.
Exactly. They're the only one that did this, by the way, just like you said.
Yeah.
So I forgot now this one here, RBC's Tom Narayan, if this was the day before the Q1 or the Q3 report or after, I don't remember. But I already did a show on this and showed his interview, but I just bring it up because I find it interesting. He's actually calling Tesla to be the safe investment because all the other auto companies, especially the Europeans, all of them have been doing profit warnings, like one after another. And Tesla is the only one that actually won't see this profit warning. They're up. And then, of course, there's the bull case that could happen. But it's just funny that he's actually calling it the safe. It's like, if you want to place safe plays, Tesla.
It is the only auto company that we can invest in the stock market. Yeah. So Tom is exactly right. Look, the OEMs are all the European or Western OEM companies are in serious difficulties. Stellantis are talking about, some strategic alternative. Volkswagen are going to have to close down a massive number of factories. Even Mercedes is talking about a strategic reset. And Mercedes is one of the few companies in Europe that are still, making money in China. And it's the loss of the China business, the loss of the China dividends, the loss of the China partner sales that is killing the European companies right now. So, yeah, all the European companies are in trouble. I think, that all the US OEM companies are going to be in serious difficulties in the coming year. Some of them, we're beginning to see that now. I think that, Tesla is the only company that has real promise and real value. And so Tom is 100% right in my book.
Okay, nice. And then you got Canaccord Genuity again. This is the day before. And he reiterated their buy rating at 254. And then he goes, we'll find out tomorrow morning, which we found out. But after what feels like endless negativity from the auto supply chain, like you just said, Stellantis and others, we expect Tesla to zig as the auto industry zigs. Our database continues to suggest things are holding up for Elon, despite Western auto OEM. And that's exactly right. So this, this consensus of 462, we just covered it at the beginning, it's actually 460. They were expecting 469. So they were, they're right around that. So
yeah, I think they'll be somewhat disappointed, as I was, because their consensus, their estimate was even lower than mine. I was totally, I totally miscalculated, and part of it is the SNX decline in sales. So that's been a factor which I think has hurt sales this year.
Sure. Again, they're tiny numbers, but yeah, explains a little bit. So let's cover some of the really negative bears also, just to be fair. Let's cover what they're saying. And, again, they continue to say that they think, JPMorgan, for example, they think the stock is worth $115. And then, now they raised it to 130.
I wonder why they raised it. I mean, what is the point?
Right. I don't have the article itself, so I didn't bother, looking at it to what. But it's just hilarious. It's funny. Oh, okay. I think they're worth $15 more now, but it's still going to fall significantly. So it's because the stock went up. That's all it is. And then you got Bernstein. At least here, they actually explained it, and they are just totally negative. They don't think Tesla's going to do anything with Robotaxi. They don't think that there's anything. So they're continuing to stay with their $120 underperform rating. So they, reported at least 463, consensus 462. Yeah, missed it by 1,000. Production in the quarter was 470, leading to a minor inventory buildup, now at 3.7 weeks. Oh my God, that's a big deal. It's not a big deal. Orange energy storage reached 6.9, 73% year over year, though marking a 27% sequential decrease. Despite the growth, these guys are very skeptical about Tesla's ability to increase unit growth this year, even with price reductions. So that's they just think that everything's wrong. They a strategic shift in investor attention to Robotaxi, and they have doubts about Tesla's capacity to outpace competitors in the autonomous driving market and win in the autonomy of Robotaxi. So they don't believe it. Projected challenges in 2025. They don't see the introduction of a lower cost model. They don't see the upcoming models to begin production, modest revisions. So they don't think that that's going to do much. So basically, that's just basically it. They don't believe anything Tesla's doing.
Well, if you don't believe in autonomy for Tesla, then you're roughly correct. I mean, one of the things that they don't understand is there are two aspects to autonomy. One is the value of autonomy to the average driver, the everyday driver, the guy who already owns a Tesla or who wants to buy a new car. The other is Robotaxi. There are two different markets. They're two huge markets. Personal ownership of vehicles are not going to go away the day Robotaxi starts driving. And it's going to take years for it to go away because it's a culture, it's embedded in the culture. So what are you going to buy? Are you going to buy a Chevy that can do, some sort of speed maintenance or lane maintenance on the freeway, or are you going to buy a car that can drive itself? Big decision, simple decision. So I think even if you accept all his arguments, you have to say that he's ignoring the power of that particular market and that particular opportunity on their auto business. If you want to judge Tesla by their auto business, that's a very important judgment point.
Yeah, but even then, they don't believe in anything but the auto business, despite the fact that it's the one that's staying strong versus all the other car companies. So It's just their point of view. Okay, so thank you very much. This is the way to do it, right? You review all of the different analysts. We did at least 6, maybe even 7 of these guys and see what they said, and appreciate your comments and in helping us interpret each of those. Thank you so much, Larry. Follow him on his X account at Tesla Larry. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.